People will mock me for this one. Hi and welcome back to Cheeky Crypto. My name's Chris and it's fantastic to have you back with us for another video. And in today's video I'm going to make a bold Bitcoin prediction, and I did say to Nick that we shouldn't get into this, but I just can't help myself. So definitely watch until the end. I'm going to have my bold prediction that I expect to see a lower low when it comes to Bitcoin. And I'm going to sort of go through my reasoning as to why I believe this. Now, lots of people are likely to mock me. It will remind me back in June when we kind of said that wasn't the actual bottom for Bitcoin, whilst everybody were talking about magical indicators and so forth. Why should you listen to me? Well, in May I predicted the bottom in June. June came, the bottom in June came in. I then said, it doesn't feel right. That isn't the bottom. I expect another lower low. Again, we were mocked. And I said that, all these magical indicators would be invalidated, and they were. And we got our new lower low. Now, I think that the market is massively manipulated. I think it was manipulated through 2021, 2022. I think it's manipulated here as well. And yeah, look, May, June is kind of where I expect the actual bull run possibly to start off. But, it's, months away and things can change. So, it's a moving target. But let me sort of explain as to why I feel this way. Hopefully you should sort of get an idea of why you should listen. Obviously go where you do your own research, but, we haven't really, put a foot wrong in this bear market. We highlighted FTX before the collapse, giving people ample opportunity to get out. We did this before ZZ put out his tweet. We highlighted BlockFi and many others as well. So we've done fantastically through this bear market. I just wanted to explain that off the bat. We're not one of those channels that's constantly saying we're in a bull run when we're clearly not. We're not one of these channels that, every single time we get a new lower low, we're saying, right, we're in a bull run now, the bottom is in. This is what the other channels have been doing, in my opinion. But we are sort of, got our finger on the pulse. So let's get down to the desktop. Let me know your thoughts and opinions in the comments below. I'm interested to get those. But let me sort of, explain why I have this theory. So let's start here. And credit card debt increased to a record $931 billion. This is an article really just to talk about how to pay off your debt. But I want to be really clear with people. Things are not looking very good, right? And Nick and myself, we have different ways of looking at the market. Nick looks more at the technical analyst and I guess investors' behavior through Elliott wave theory. And I look at more of the macro, the real world stuff that's happening that, is correlated with cryptocurrency and could potentially, cause a hiccup down the line. So we're both kind of similar in our thought pattern, that, either there's going to be, basically there's going to be two things that play out here, two possibilities of plays. We've got the confirmation that the bottom, was in, the most recent bottom is in. And, we've got to come down to get that confirmation, or a new lower low. And I'm going with the new lower low just based on, this sort of stuff that we're seeing in the real world, right? Credit card debt increased to a record $931 billion. That, plus I think the Fed have fucked up, to be quite honest with you, with their latest moves. And I think that they're going to end up paying for that. And I think a lot of people are going to end up paying for that alongside the manipulation in the crypto market. I think the market will be pushed to a new lower low. And I think that will be the final one. And I think it will be the one where all the accumulation will be carried out by the big players. So, it's an interesting one. But why is the credit card debt being increased to such a level concerning? I mean, it's the most expensive type of debt, and that debt is not going to be able to continue to be, if I can get my words out, serviced. So we are going to see people defaulting. We are going to see people having to sell. We are going to see big impacts. Believe me, I don't think people have really felt the pain just yet. So there's an awful lot to come. I do think that, you know, we need to be aware of this sort of stuff. The next thing that I want to talk about is reshoring on the rise as supply chain pressures ramp up. So I think that there's a few concerns when it comes to retail. I think there's some big concerns around various different aspects when it comes to supply chain. I think that there's going to be a lot of retail stores that have got too much stock and they're going to have to take losses. I think we're going to see an awful lot more people lose their jobs. I am literally looking at this stuff and it just does not look good at all. And I think that at the moment people are oblivious to what's going on around them. And particularly in crypto, I don't think people are, one, taking much notice of anything else apart from the crypto market. Don't get me wrong, there's a minority that are looking at more of the macro stuff as well. But I am concerned that, you know, with this stuff that we're going to see, I think, you know, basically, you know, Nick talks about it all the time, supply and demand. There's going to be so much supply and not enough demand. So prices are going to have to come down for, you know, some of these retailers when it comes to overstocking their stores. Nike are doing this as well, by the way. You know, it's from the very small to the very, very big companies that are going to find the issues and you know, going to have to take a hit on that side of things. So just be aware of all of this. You know, it comes with great expense to, you know, reshoring, you know, your supply chain and all that sort of stuff. So just be aware of this. I do think that it's a concern. The other thing is the used car market. For me, the used car market is, again, another market that is going to have a surplus supply of cars, again, bringing down the prices of second-hand cars. And I think this is really because, you know, the whole virus situation that we had, people didn't want to, you know, use public transport, so they bought a car that they pretty much didn't need. Now that, you know, all of this stuff is passing, and I say passing, it hasn't completely passed, but it's passing. People are feeling more confident to use public transport again, realizing they don't need a car, getting rid of it. And basically what do we get? We get a market with more supply than we've got demand. So again, I think, you know, these car companies that, you know, are selling secondhand cars are going to have to take a hit. Again, I think we're going to see job losses and all that sort of stuff. You know, couple that with property crisis that, you know, particularly in China is something that people have stopped talking about, but we should be really aware of it. I just think that, you know, with everything from, you know, a macro point of view, it just doesn't look good. That coupled with, I think that there's manipulation and, you know, big players are just moving the prices. I just, like I say, I think a new lower low is going to come in. Let me know your thoughts, your opinions on everything that I've covered in today's video. Really interested to get your views and opinions. You know, even if they differ from mine, that is absolutely fine. Let me know, you know, why, and you know, try to debate that with us. Really interested to see those opinions. If you enjoyed today's video and you appreciate us, you know, making a bold statement like this, going completely against the narrative, then mash up that like button, subscribe if you haven't subscribed already, tap in that bell, selecting all the notifications so you never miss a video, and I will catch you in the next one. Take care.